As I mentioned earlier, we're super excited to kick off our annual conference, and we hope that you find all of our content valuable. Peter Horadan is the CEO of Lockstep. He's going to start us off today. And then Matt Shanahan, who is the Chief Strategy Officer at Lockstep, he's going to follow up. And then just to close it out, we're going to have a panel discussion with some of your peers. So thank you so much again, and I will hand it over to Peter.
Thanks, Whitney. So I just want to double down on saying thank you to our sponsors. We have some terrific companies who've helped sponsor our sessions today and tomorrow, make them possible. You'll be hearing from them. We have a great agenda put together for you, as Whitney just went over, and so we can't wait to share our thoughts on the future of modern accounting with you. I'm going to start by talking about the dawn of what we're calling connected accounting. Before I dive into that, just briefly a little bit on who I am. I've been building accounting software for 30 years. So I started at Microsoft in the 90s. I worked on the personal financial accounting team. We made Microsoft money. That was back in the early days of the internet. And so I was participated when we connected that to banks. We did some of the first online banking, online bill payment transactions. Later in the 2000s, I was an engineering leader that built Concur Expense, the expense management and reporting service that's now the #1 leader in expense management. I meet a lot of people who file expense reports on Concur, and some have good things to say to me, some have bad things. But that was really fun to build that and change the way that expense management is done. And more recently, I was CTO and head of engineering at Avalara, the transactional tax company. So I've spent a long time building and thinking about accounting systems, and what's really interesting to me is it seems like we're really just still at the start of transforming how accounting is done now that we as a society have computers. If you think about it, I want to take you all the way back to the birth of accounting. They think accounting actually started about 7,000 years ago. They found records in ancient Mesopotamia of actual accounting records that they've unearthed. I had to look this up. Mesopotamia is over near where Iraq and Syria are now. That would be like you and I making a general ledger, and somebody in the year 9000 shows up and is looking through our general ledger. That's how long ago that was and how much history there is of accounting. But more recently, this is Luca Pacioli. He is widely thought of to be the person who invented double entry accounting. He lived in the 1400s. And back then, the merchant class was emerging. They had to figure out a way to keep their books, and he invented what we now know is double entry accounting. And if you think about it, if he wanted to send an invoice, what you had to do, at that time was what he's doing here. You had to put your hand on a book and get out your quill pen and have your crystal, and you wrote out your invoice longhand, and then you probably gave it to this guy, and then he'd go, hand deliver it for you. Then the other person would open it, read it, use their quill pen, maybe enter it in their journals, make their double entry accounting, etc. That's how it's been done since, the 1400s. In the 19th century, we built shrines to accounting. This is a picture of a bank that was built in the 19th century. I mean, it's an incredible, lovely building. Interestingly, in the 19th century, during the Industrial Revolution, accounting is widely credited for helping to make the Industrial Revolution possible because it enabled new methods of corporate finance. And those new methods of corporate finance allowed us to put capital to productive uses, railroads, to build factories, to make investments, and to be able to account for that enabled us to deploy that capital well, which enabled the growth and the progress of the Industrial Revolution. Nevertheless, if you were to come into this bank in 1800 and make a deposit, the record of your deposit would be kept on paper. You'd have a paper passbook that you carried around. They'd record it in the paper ledgers of the bank. They would then take it in the back room and record it in their paper journals. So paper has been with us for a very, very long time, including even more recently when I grew up. This is a Columnar Pad. When I was age 12, my father is a tax accountant. And my very first job when I was age 12 was to sit at the dining room table and balance his Columnar Pads. If you're my age, you'll remember these. If you're not, this might be kind of a mystery. But you see there's columns across the top, there's rows down the bottom, and you'd put all of your numbers in the columns and rows, and then you would add across and add up the totals across, and then you'd go ahead and add down. You'd add all of the columns down, and then you'd total that up, and those two things had to match. That was a process called cross-footing. If they matched, great, you could go on to the next columnar pad. If they didn't, you knew that you made some kind of a mistake, and you had to go back and start over, which was kind of a miserable process. There are a few tricks to it, like if you're off by 9, you'd transpose 2 digits and stuff like that. But that took up a decent amount of my 12-year-old age of sitting here, manually cross-footing and balancing these spreadsheets. Then something interesting happened, right? Computers came around. I remember I introduced my dad to Lotus 1-2-3, and I said, hey, we don't have to manually add this up anymore. You could actually put your spreadsheet on the computer and it'll calculate it for you. And what's interesting to me is for several years, his spreadsheets on the computer still had cross-footing. He would still add across, he'd still add down. He had 2 columns, add across, add down. Did they match? And I kept saying to him, I'm like, Dad, the computer's not going to make a mistake. You don't have to do cross-footing anymore. It's going to add them up correctly. And it took him a while to start trusting the computer, which was interesting. It takes us a while to adapt to technology, to think about, okay, how did this really change things, and how can I let go of practices I was doing in the past and embrace, what might be possible for the future. Well, nowadays, of course, we live in a world where computers are really a part of everything that we do. All of us carries a little computer in our pocket. We do all kinds of incredible stuff on it. Like if at night, if you're hungry, you can order a whole Italian dinner to be sent to your house. And not only can you order that dinner, but you can use the computer in your pocket to say, okay, well, which is the best one? Which has the best reviews? And you can, figure out exactly what you want. Then you can track it all the way to your house. You get a little tracker of where's the person delivering it to your house until it actually shows up. You can do all of these amazing things with this computer in our pocket. But it's interesting, for too many of us in accounts receivable and accounts payable, when we go to work, it's like we're still living in the 1980s. Not a ton has changed, and some of the amazing things we can do just in our houses with the technology that's available today, our workplaces, our AR and AP workplaces, are really still working to catch up. Before we had computers, everything was recorded on paper. Here is an example of a double entry general ledger. One of the things I've noticed is they had lovely handwriting. I wish I could write that nicely. But here's the government, also, kept their books on paper. So this is the federal government's ledger of who paid income taxes all the way back in 1860. It's interesting to me, like I would love a tax bill of $4.17, or even I'll take the $1,279 one. But the government kept its books as paper also. Here's a copy of an invoice, familiar to many of us in ARAP. This is Thomas Edison, who bought some supplies for his company. So invoices were all written out longhand. They were then sent through the mail and read and processed by hand. Here's a copy of an income tax return, again from the 1860s. What's interesting to me is how much the technology available at the time influenced the design of this income tax form. This income tax form is asking for summary total amounts. It's asking for what were your total sales and what were your total expenses. You don't have to tell me what made up your income or what made up your expenses, just enter the totals. Now, the reason for that we do summary total income tax returns, which, by the way, we still do even to this day. Most income tax returns, most corporate income tax returns in the US, you enter your summary totals and then use that to fill out other boxes. It's not because the government's benevolent and doesn't care about what business we're doing. The government would love to know what business we're doing. The reason is because at the time, it would have been entirely impractical to basically take your general ledger and ship it and upload it to the government, because first of all, you'd have to hire somebody to come with their quill pen and copy every single journal entry out of your journal onto a piece of paper. You would then send the stacks of paper to the government where they have to be opened and read manually. It was just totally impractical. So what we came up with was we came up with these summary returns, and we came up with the idea of random audits. The government say, well, just to make sure that you're being honest, I'm going to randomly choose some people. I will send my agent to your office. They'll inspect your books in person because I can't ask for a copy. That would be unreasonable. And they'll decide if you've done this correctly or not. So fast forward to today, we're still doing things this way. Although that's starting to change. Worldwide, governments are starting to realize, hey, wait a minute, those choices we made in the 1800s about how to ask for information from businesses are invalidated. Now, every transaction's digital from the moment it happens. So why are we still satisfying ourselves with these summary returns? Let's just have companies update their whole general ledger. And then what we can do is we can match up the general ledger of various companies. If this company is claiming a deduction because they purchased supplies from another company, I can go to that other company, I can make sure they recorded a sale and that they actually paid taxes on that. This is starting to happen worldwide. This happens in India, in Brazil, in Portugal, and several other countries, and even in some states in the US. If you participate in a simplified sales tax regime, you actually do have to upload all of your sales to the states that you're in that program with. So this is starting to change, but the interesting point, the reason I'm bringing this up, is because for hundreds of years, we have lived with a method that matched the technology of the time, but isn't what we ultimately really want. And so the technology shaped how do businesses work with the government and how do businesses work with other businesses. Well, we're just going to send paper invoices back and forth. We're going to send summary information back and forth. We can't really integrate these things, so we're going to do the best we can. If you think about it, computing has only existed for 0.3% of the total timeline that all of accounting has existed. So accounting's been around for 7,000 years. Computing's been around for about 30 years. It's a tiny fraction of the development of accounting that we've actually had computers, and we're still catching up, and we're trying to figure out how can we rethink what we're doing and how can computing make it better? Well, why does this matter? It matters because it impacts our cash flow. Cash flow is critically important to any business. The number one reason that companies go out of business is because of cash flow, is because they ran out of cash. You see Jack Welch, one of the most legendary managers. Here's his opinions on cash flow. I like this one. This one's very pithy. This is the rich dad, poor dad guy. Making more money doesn't really matter if cash flow management is if you run out of cash, it's all over. What do the CFOs think? What do the CFOs running our departments think? Deloitte recently did an extensive survey on this, and over half of CFOs said cash flow is their top priority. It's not among their priorities, it's their top priority. So how are we doing? How are we doing with using the tools we have and the processes we've put together today to manage cash flow? How's it going for all of us as an industry? Well, not that well. So this is a survey done just this summer, and it looks at what is on average the status of all outstanding invoices. Only about roughly half of invoices are current and are paid on time. The other half of the invoices we've sent are either past due or they're in default. And they're not just a little past due. This chart is showing the average days late. So that 1 to 30 days means 1 to 30 days late. So these invoices are actually significantly delinquent. And this leads to cash being trapped, right? The cash that you need is trapped by the processes that we're using. And who's paying the price? AR and AP teams are paying the price when technology isn't meeting our needs. This is actually a survey, a study that we did where 1,000 AR and AP teams, and we actually did in-depth interviews with over 50 teams. And what we found is that more than 3/4 of controllers say their processes for AR and AP are mostly or entirely manual. We found that the average number of emails that the average AR or AP person gets is 100 emails a day. They're answering those emails mostly manually, and they report it takes maybe 50 to 75% of their day to respond to all of that email. This number is a little hard to calculate, but when you multiply it by the number of AR and AP people in the world, we estimate that there's something on the order of 1 billion emails exchanged every business day between AR and AP teams just trying to make the books work. What we've done is we've taken those old methods and we've sort of, lifted and dumped them onto the use of emails, PDFs, Excel, Gmail, and Outlook, but we haven't actually made our job any easier because we've made it so that we receive them electronically, but we're not really, rethinking or processing them in a different way. And this is all happening in a context where data is more and more available. Excuse me. So this chart tracks the availability of APIs on top of financial systems. Financial systems used to be locked in our office. You'd be running your accounting system running under somebody's desk on a PC under somebody's desk that everyone would connect to. Well, now more and more people are embracing online accounting systems. And so the presence of this data online, or the ability to connect to it online, is going up dramatically. And so, the data is available online, but we tend to still be exchanging it in ways that are mostly manual. So all of this leads to what we call cash traps. What is a cash trap? If you've watched, for example, the show Gold Rush on Discovery Channel, they're mining for gold. So they get giant buckets of gold and they put it through their wash plant, and they have all these traps that try to trap the gold, and have the dirt all get washed away while the gold gets trapped. So there you're trapping something good, and you want to trap the gold so that you can recover it from your mining operation. Another thing you might be familiar with, maybe if you don't watch a show, is just lint traps all around your house. If you think about your windowsill or the dryer or under the couch, like lint just gets trapped there. There's all this lint in your house. Why does it keep getting trapped there? Well, a cash trap is sort of the same idea. We have processes that are getting cash trapped all throughout our organization where it really should be in our bank account, but it's not, and that is harming our cash flow. Okay, moving on. So the manual collaboration between AR and AP produces cash traps, right? Cash is trapped in all of this email that's sitting there in all of our inboxes. It's kind of amazing that if you need an Italian, if you want dinner, you can get it in half an hour with all these features that I just talked about. But if you have a $100,000 bill from your trading partner, the best idea we have is to send them an email and hope that they open it, and hope that sometime in the next 30 days they actually open it, read it, hand enter it, get it approved, and send me the money. And then I go on and I do that times lots more invoices. It's sort of interesting that that's still the modern way that we go about trying to talk to each other about the state of really the books that we share. Because my AR balance is your AP balance, and vice versa. And my payment sent is your payment received, and my dispute opened is your dispute received, and your credit memo issued is my credit memo received. And the same, if I use that credit memo, it shows up in my books and it shows up in your books. And all of us together, we're all exchanging this manually via email. Now, some people I talk to about say, well, hey, doesn't AP kind of like that? It seems to me accounts payable paying slowly because that's a great way for them to manage their cash flow. They get better cash flow if they can just sort of play dumb and pay slowly. I tend to think that, first of all, I think that that's a great minority of businesses that actually operate that way. And there's a couple of reasons for that. One is that it's just simply bad accounting practice. And in fact, you're going to fail your audit if the auditors start to get the idea that you are deliberately recording invoices not in the accounting period in which they were incurred. It's also rude and hostile to your trading partners, where you're just kind of playing dumb and playing three blind mice. So I don't have your invoice, so I'm not going to pay it. That's not a strategy that's really going to last very long if you want to have great relationships with your trading partners. What I do see some teams do is say, hey, we're just going to pay net 60. I don't care what the terms are. Our cash flow management is to pay net 60. We're going to be upfront about it. But even if we're upfront about it, we still want to receive the invoice. We still want to know we owe the money. We still want you to be able to plan for your cash. We're paying net 60, and us to be able to plan our cash, because when we pay net 60, it's still got to come out of our bank account at the end of that period. So we all still need to be able to have orderly accounting books, to close them in a timely way, to close them accurately, and to be able to plan for our cash. AR and AP need both things, even if your strategy is to pay late. So these are causing cash traps really for both companies, this idea that we're still doing everything manually. Paper is another huge cash trap. This is a survey that Level Research did, that just kind of the short story here is if you're a large enterprise, you're about 40% automated. 40% of your invoices come in some kind of digital format where you're not opening and hand keying them. That means you're still opening and hand keying the other 60%. In the mid-market, you're opening and hand keying 80% of all of your invoices, payment remittances, everything that goes back and forth between businesses. And if you're a small business, it's somewhere on the order of 90% of what you're doing is having to be opened, hand-read, hand-processed, and hand-keyed. Personal inboxes are cash traps. A lot of us in AR and AP have all of your business going through your personal email inboxes. So responding to vendors happens out of your personal email, or responding to customers, or asking vendors to update their information, or asking customers to update their information, or doing onboarding, or asking about when are you going to pay, or asking about, hey, can I have a summary of my invoices so that I can make sure, that I've trued up because I'm trying to close my books. All of that stuff is all happening in personal inboxes. Outlook and Gmail are great tools, but they really weren't made to run an accounting system. They're not connected to your ERP. They don't know what an invoice is. They don't even know what accounting is really. They're very generalized. And so you wind up with problems like if someone goes on vacation, what do you do? Because half your business is stuck in their personal inbox. If you're a controller and if you want to know, can I close my accounting period? You don't really know because there's all this open stuff that's just really being trapped in inboxes. Inboxes are not a great way. Personal email inboxes are overwhelmed, they're flooded. It's not a great way to manage your accounting process. It turns into cash traps. Portals, where you log into another person's accounting system via some sort of web UI and you enter stuff for them. These are cash traps. I know of almost no one who likes these. You have to manage passwords for these portals. They're complex to navigate. They're all one-offs. They take your time. There's a lot of manual entry. It doesn't work like anything else in your organization. Portals create a lot of friction between customers and vendors and create even more cash traps. If you zoom all the way out of it and you think about the status of accounting teams have really been left behind by the software movement, especially AR and AP teams. There's great accounting software out there, including accounting software by our partners. But if you're in AR and AP, you're forced to be the manual glue between those accounting systems. So if you're in sales, you've got Salesforce. It's a great system. It manages everything you need to do. If you're a customer team, you have Zendesk or one of its competitors. If you're a development team, you have Jira. But if you're in AR and AP, sir, you use accounting software, and it might be great accounting software, but all of the work of synchronizing your accounting software with all of your trading partners is done manually by you. Your accounting software doesn't do it for you. You're left to do it in Outlook, Gmail, and spreadsheets, and it's not good enough. Then this hit us. If that wasn't enough, we got the coronavirus. And we're all in different phases. The best estimate of when this will change, of when we'll get out and kind of be able to go back to the way we possibly used to do things, is the end of 2021, is the estimates that I see. Or maybe even never. There's a really interesting article in Payments Journal recently that interviewed CFOs. A lot of CFOs are saying, hey, now that I've tried remote work, I kind of like it. I see the value in it. I'm going to want to try to figure out how can I keep this actually, and how can I embrace this? And so the virus has caused us to embrace remote work all of a sudden and figure out how do we remake our department, how do we redo what we do when we can't even go to the office, when we can't even touch the paper anymore, when paper simply won't work. And the idea that this is temporary, it's not. I think this is going to have a profound, permanent change on the way we do accounting. Okay, so that's how we got here. What we saw is that the way we do things today was profoundly shaped by the technology that we've had available at the time. What if we said, hey, you know what, let's redesign accounting. Let's redesign the way that AR and AP works together for the modern world. And let's rethink how it should work if now that we have computing, now that we're all connected, how should AR and AP be able to work together and be supported by their tools? Well, one thing is all the invoices and all the other documents you deliver should come as data, not as PDF or paper. In other words, we really should try to eliminate rekeying. It really makes very little sense. Every transaction is digital. The moment it happens, it's recorded digitally. It's recorded in an order-taking software, quote-to-cash software, in your accounting software, or in Salesforce. The moment it happened, it's digital from the start. Why on earth are we taking data that's digital, that's in your accounting software, printing it to a PDF, sending it to a human so that they can open it and rekey it in their accounting software? Really, we should be sending data back and forth. And our accounting software should be able to see that data and read it so that we don't have to keep rekeying all this information. Rekeying makes things slower. It produces work nobody wants to do. And it creates chances for inaccuracy. So we should eliminate that. We should directly embrace the idea that every company is connected. AR and AP are connected businesses. You are connected to all your vendors. You're connected to all of your customers. We should embrace that in the way that we design our tools. A big part of the way that's happened is allow your trading partners to directly see what's in your ERP. If you're tired of answering the question, hey, when are you going to pay my invoice? Or hey, did you get my invoice? You should be able to say, hey, I'm going to give you a link. You can use that link and see just your invoices in my accounting system. So you can come right in and see the same data that I'm seeing. And that way you can see you can see what's open. You can see what I've recorded. You can see what I'm planning to pay, when I'm planning to pay it. On the AR side, hey, you can see all of your open invoices. You can close your period. You can true up and make sure that our books are both balanced because they need to be balanced. We should be able to create connections so that your trading partners can see just what they should be able to see to help them do their work without having to send you yet another email. There's lots more questions too that trading partners should be able to ask you, such as, hey, could you update your contact information? Can I get the latest? Or if I paid early, could I get a discount? None of those things should really require email and manual interaction. Those are all things people should be able to do on their own in a self-service way by getting a little bit of a view into your accounting system. AR and AP should have software that supports how they work. Hotmail and Gmail are great, but they weren't built for AR and AP, and we need to fix that. And the final point is we really should be embracing collaboration and connection over passwords and portals, right? Having to keep long lists of passwords, trying to figure out how to log into someone else's portals, all we're doing is replacing one kind of manual work with another. And really, we should embrace the idea that my accounting system should collaborate with your accounting system, that your organization and my organization are already connected. Our accounting system should be connected too, and it should be doing a lot of this work for us. This is our vision. This is what we're building at Lockstep. We are building what we call connected accounting. Our vision is that the trading systems of partners should be able to be connected. You shouldn't have to be doing this yourself in Outlook and Gmail. Our vision is to create a world where we've connected the world's accounting departments to make them more productive and successful. It's been a long time getting here. We're very excited to be on this mission. We're excited and proud to be part of the 7,000-year history of accounting and to be working with you to re-envision how accounting is done. And so with that, I'd like to hand it over to Matt Shanahan, who's going to lead a panel discussion. And I'd love to hear your thoughts on everything I've talked about, either as part of the session today or on accountingconnected.org or in the happy hour we're having later today. I'd love to hear what you think of where we're going and how we see things. Thanks so much.
Thank you, Peter. As Peter said, my name is Matt Shanahan. I'm our Chief Strategy Officer. Our mission is really to think about how we connect the world's accounting departments to make them more productive and successful. And, you know, we've been on this journey for a while. Currently, we serve over 170 customers today. Those are companies using our technology. You can see some of the brands here. We also have deep integration into different accounting systems that sort of powers all of this ability to share data back and forth between trading partners. So we're excited about pursuing that vision, and we're doing it in a way that really is incremental, something that you can get your hands around right away and move on. As Whitney indicated, throughout the presentation, we did want to take a chance to poll and kind of learn from you about what's going on in your environment. We do webinars about every 3 weeks, and one of the frequent questions that we ask is just about remote work and what will happen post-pandemic. Will you go back into the office or not? I hope you could take a chance to just share your thoughts quickly here, and then we'll move on from that. Okay, just about half of everybody inputting. Give you a second more. All right, thank you everyone for participating. Just to share the results, what we see, what people responded was 19% said no, they would go back into the office. 55% said sometimes, so they'll partially work from home and partially in the office. And then 26% said full-time at home. And that's consistent with what we've seen. Kind of time and time again as we've gone through the polling, we see that, as Peter indicated, it has changed, and it's changed permanently. And so that's why, now more than ever, it's really a time to modernize. The move to remote work means that the tools that used to exist, so when you think of Outlook and Excel, it's very hard to collaborate with other team members using that technology. There's also a priority to manage liquidity. Liquidity is a pretty important part of the business right now. We saw it as a top priority for over 50% of the CFOs. And then as Peter indicated, and what we went through is really the availability of technology as well as bandwidth. So software technology, bandwidth, all of that's available today to make a difference in the solutions that you can do. So over the next 3 sessions, we will be covering 3 actionable connected accounting strategies. The first one that we'll talk about is actually digital onboarding. Digital onboarding is a way to collect profile information from your customers, but do it online rather than exchanging PDFs. We'll go into the details of why that's important and how that impacts your cash flow. Digital onboarding is something that we do as consumers every day with whether it's banks or other institutions, but business to business hasn't had the tools to make that possible. We are making tools available for you and to do digital onboarding as a practice. We'll also talk about a team inbox approach. So currently, most people, when we did our surveys, most people are using their personal inbox in Outlook or in Gmail. The challenge with that, especially if you're managing a team, is to understand the activities of your team. How do you get visibility into what got done today? How do you know the status of different activities? How can you follow up or decide who to coach and how to improve your process? If it's all built on Outlook and Excel, it's very difficult. So the concept of a team inbox and being able to do team activity management will be a critical element. We'll also talk about, rather than a portal and passwords, how you can provide online data using a magic link. A magic link is a technology that's kind of like a one-time password, but just somebody's able to click on it. And so we'll go through the different use cases that makes it possible so that you can really think about how do I migrate my customers online. And before we do that, what we'll do is actually open up to our panel. So I'm happy to introduce Bridget Santagate, who's joining us from Austin, and Carla Brown, who's joining us from California. So thank you very much for joining us. And we have there's some questions that we wanted to talk about. The discussion that we just had was really about how accounting practices in some ways were shaped by technology decisions a long time ago and haven't necessarily pivoted based on technology that's become recently available. We invited Bridget. She's a current customer of Lockstep. She had a chance to chat with her because she's probably one of those people that's pushing technology more than others. So I invited Carla. She's been with SWK Technologies for a while, and she's been on the edge of technology innovation for her entire career. So just to start off with, when we talk about the time is now, how has the pandemic really changed the mindset, maybe the technology mindset for controllers and CFOs? Bridget, I don't know if you could touch on that a little.
Sure, Matt. And again, thanks for having me. I'm truly honored to be here, and what a wonderful partner you guys have been to us and really helping me achieve my goals at Cantata. So as far as the pandemic goes, it's really put the emphasis and the importance of real-time information and accurate cash forecasting for us. With this knowledge, my executive team can strategize better. They can pivot, when they see alerts, they could take that, pivot it to more positive outcomes. I feel it's really critical in these uncertain times in this atmosphere, especially for Cantata, because we are, 100% of our customers are healthcare providers. So you could imagine, dial back the clock to like February and what started to happen with our New York hospitals. We basically went into panic mode, and I was like, come on, let's use our tools. Let's, leverage those communications. We immediately set out, and use the tools that we had available to communicate with the customers and get our feedback and really get a temperature of what's actually happening. Make our decisions based on their feedback instead of just reacting to the pandemic and the shutdown and, looking at going out of business, So it's been really wonderful to have that tool.
It's a great point that you brought up about being able to know information sooner. It gives you more time to come up with a plan.
Right, the real
Carla,
information.
Absolutely. No, absolutely. Carla, I don't know what you've seen from your customer base.
Yeah, so it's been interesting because the word cloud and moving to digital, the digital transformation and all that over the past couple of years, it's been something that's been talked about. People have been understanding it, and some people teetering on it. And then COVID hit, and it was like, okay, we have no choice. Like just like you were just talking about, Bridget, where people had to move into the cloud right away. They had to start transacting, paying checks. You can't go into the office and go print a check. I don't have a printer at home. Those types of things. File cabinets aren't in the, if they're stuck in the office, that's not going to work because you can't go back in the office. So we saw a very quick turnaround in that education being fast forwarded. So we started to educate even more and say, okay, what are your options? How do we get digital really, really quick? And that goes everywhere from the CFOs, the controllers, educating them, who oftentimes, you're right, are stuck with their file cabinets and I want to see a piece of paper, I want to approve it, I want to stamp it, that type of thing. So it kind of forced people out of their comfort zone and fast forwarded into this cloud and remote capability to be able to transact things on your phone, to approve an invoice or to pay something or to accept a proposal, that type of thing, all the way from accounting down to sales, down to inventory, etc. So it's been interesting. It was a fast-paced 6 months there. Definitely. Yeah. It's been really interesting.
And it's interesting that you use the term digital transformation. I mean, you're in some sense in sales and marketing. I am too. I guess my question, starting maybe with Bridget, is digital transformation really something of interest to accounting departments, or is that just kind of marketing speak that marketers are doing?
Oh, I definitely believe it's not only that it's real, but it's necessary to keep up with the rapidly changing environments. And not just from my perspective in the AR kind of silo in the accounting department, but I see, our contracts moving more all digital now, where our customers are going to be able to log in to our portal, select their items, and there's going to be a price book there, and that in turn is going to feed into our accounting system. So our billers are using it, our accounts payable is using it, and now I'm using it too. And we're trying to kind of integrate that all together and have the systems talking to each other. So rather than stopping by a cubicle I'm not able to do anymore, or open up a Zoom meeting, it's there and it's being updated, and we can share this information and see it working, and I really think to remain viable, businesses have to do this. They have to streamline. But the downfall of that is we're becoming streamlined, which makes our AR resources, they're tasked with more to do. So how do we, these task masters need to be able to accomplish a lot in a day. So the automation makes it possible, and having the valuable tools like Anytime Collect and others, they're really working for us. For me, it eases the stress and it reduces my anxiety and it promotes productivity. That's the way I see this working for us.
Carla, I don't know what you've heard from different people, if that's a CFO agenda item, or is that?
Yeah.
Oh,
Go ahead, Carla.
No, go ahead. For a CFO agenda item for which piece? For the digital transformation? That's what you're
Yeah, it's digital transformation of CFO item.
Yeah, I think there's been a lot more people wanting to educate themselves and know what's out there, just like Bridget. Bridget's ahead of the game, and I think it's great because with the pandemic and with what's kind of been going on, we need to be able to, our customers need to be able to transact from wherever they're at across time zones. So you have, and allow your AR and your AP people to work smarter, right? They're not calling on the phone, trying to collect on a physical phone call, trying to get someone who's probably not in the office. They're probably, who knows where they are now, because we got a lot of people moving and, not even staying in their own homes. They're actually going and vacationing somewhere and staying there and working from wherever, because we can do that now. So I think you'll start to see, once they adopt this digital transformation, that we'll be working smarter. So AP, AR people will be doing things that are more, instead of pushing a piece of paper or stamping things, they're actually making more educated decisions and being able to work more efficiently. So, and there's lots of numbers out there on that, where you look at what does it take from an AP perspective when you automate. What is it? I was taking 20 hours a week to do accounts payable data entry, and Peter talked a lot about duplicate entry, just doing that data entry, taking 25 hours a week, then they're down to 2, just automating, and they're actually saying, okay, what do I need to pay? Let's gather it, let's go approve payment and watch my cash flow with it, right? And be able to do real-time cash flow.
Absolutely. I'm also curious what you've both seen relative to remote work. How has remote work impacted, choice of tools and what people are doing?
You want to go first, Bridget?
Sure. Remote work. Actually, I think we work more now and more collaboration versus delegation. We really need to keep that face time. So our team has now shifted to a daily team where I can, speak with everybody in my group. We all know where we're going, what our tasks are for that day. If we need any help, we just, get together for that half hour or so in the morning. And I really think it's made our team stronger, a little more cohesive. There's not as much questions. I'm not wondering what she's doing over there. They all know what I'm working on, and I think it just makes it a little bit easier for us, to manage that activity. And as far as my team, my collectors that I have working with me, again, I get with her, and we have a pretty good way of going down our task list, and it's sorry, just
no, but it sounds like you have a daily stand-up.
So many things to think about,
Yeah.
I
So it
love
sounds
what
like
she
you have a
said.
daily stand-up that you're
Yeah, I
doing.
love what she
Is that
just said
right?
about the daily stand-up. That's very common for
Yeah.
internally at our company, as well as I'm seeing a lot of our customers. They're daily stand-ups that are short and sweet, but it's a way to kick off the day, and using tools like Teams to where they're collaborating in teams to be able to send messages and not take 50,000 emails a day, start to collaborate that way. So I think we're seeing a lot more short and sweet meetings, but more often that are just kind of keeping things going, if that makes sense.
Yeah. And what about the technology skill set for the teams? You know, Bridget, you're sort of a natural with technology, but you know, certainly, Carla, I'd be interested to see what you're hearing about technology skills on accounting teams. You know, is that an increased requirement, or are people looking for that?
I would imagine, yeah, it's definitely an increased skill, and I think we're seeing more of it now because, again, people are being forced to do it. Whether even if it's at home things that you're dealing with, Netflix, or things that are more technology based. You know, we do everything with this now. It's hard to get through a day without using some sort of technology. So I think we're seeing a wider adoption of technology in our lives, and I think that as we're looking for people and as people are hiring, we are looking for more technical skills. But it's an easier learn because of what we do from our day-to-day, everything else we do.
So it gets into a question about a certain role. It's interesting, over time in sales organizations, and especially as Salesforce came out and somebody has to configure Salesforce to run the sales operation, they actually created a role, which is sales ops, right? That is really kind of a technology and process role. They're trying to figure out, how do I make the process better, and how do I use technology in the middle of that? And it's actually a role inside sales, so it's not in IT. The same has turned out to be true for marketing. Marketing now has marketing ops, right? And they do the marketing automation piece, and they work to figure out the process and how to make that better. But then you get to accounting, and you know, I haven't heard of anyone really talk about accounting ops as a role. Curious what you might think about, you know, should there be a role called accounting ops? If so, what should they be responsible for?
That's a great question. I never really thought about it quite like that. I guess I am that person at my organization, you know, and I work closely with my manager, the controller, and try to figure out best practices, how to engage our customer service and operational teams. And we have a new general manager, and he's doing a great job of kind of bringing everybody up to speed and kind of using these technology platforms. It may seem like more stuff we need to learn. At first, everybody's a little scary, but once you kind of get in there, you sign up, and you see how easy the workflow notifications are, you know, it really helps. But now, you know, and having this platform, having Anytime Collect, and they have questions about their accounts, you know, who should I be calling, where should I worry about? And I'll be like, hey, let's log into Anytime Collect. I'll show you your accounts. We're assigning territories, you know, for each team. They can go in, they can see where their accounts are, where they need to focus, any specific aged items that maybe now they want to leverage for additional sales, to kind of like, why wasn't that item taken care of? You know, or paid, is there a dispute? Are they not happy with it? So the AR aging tells a story, and having this portal available for the account managers to kind of go in and see their accounts, it's really great. I mean, I'm trying now to get more adoption in there with the customers, but having my account managers and sales teams on board with that, and using this tool to help promote and encourage the customers to use it, it's really exciting. I'm getting so happy.
That's good. Carla, I don't know what you think about the role.
So I'm not sure I totally agree with it, because I think that, as you just heard, as I'm looking at Bridget, I'm going, she's the ops, you know, she's the one buying into this digital transformation. She's the one that we're selling to these tools and really understanding it's the GM, all the people she just mentioned, and it's kind of a cultural shift, right? I'm sure, Bridget, you went through that where it is scary at first. Wait, I don't have a file cabinet. I was talking to one of my customers talking about AP automation, and we've been working with the IT person that is in the accounting department. So when you said, you know, accounting ops, it immediately made me think of him. And we've been talking for, I think, 2 years about it. And they do a ton of AP. So it makes sense for them to do it, right? And it wasn't until the pandemic hit where he said, oh, geez, people aren't going to be sitting here anymore. I can't see what they're doing. My file cabinets are here. And how do I do this digitally? So I think it's really about educating the right people, which is controllers, CFOs, GMs, anyone who's got can help with that cultural shift in accounting. Is just as important, if not more important, than actually putting someone in a position for ops to help implement that change. And then I think something else, like Anytime Collect, she was just saying, you know, once that gets implemented, so you get over your implementation, most of the implementation comes from the vendor, right? Anytime Collect, to get it in and control that ops and go through what's your workflow, how do we implement this? And once it's in place, there's tweaking here and there every once in a while, but I'm not sure it's completely needed, if that makes sense.
No, it does make sense. It's interesting that a full-time role is probably not the answer. You know, for instance, on my team, we do have one of our marketers does have ownership over the marketing automation solution, right? So she's the go-to person to make that happen. So you do need somebody that, like you said, it has the mindset, the ownership, the responsibility. It may not be a full-time job, but it's also not something that, you know, I'm a believer that it's not something that should sit in IT and that you wait for IT to make the change. You know, the expertise lives in the accounting group, right? So
it has to
empowering
account.
Yeah. That's great. Well, one last question, just, you know, I really appreciate the time, but just kind of your final thoughts on priorities for AR and AP teams today. What's, you know, we mentioned cash flow. Is that really the top priority that you see?
Well, I can go first if you want, Bridget.
Sure.
What we're seeing is definitely cash flow and real time. So Peter was talking before about, you know, slow paying and oh, I didn't get the invoice. Can you resend it to me? That type of thing. So having the ability to make sure that your invoices are going out, that the customer has access to them, so there is no slow paying, as well as being able to see that cash flow and those trends. The example he used about, you know, they're going to pay in 60 days. Well, at least I can know that now by using a tool, and I can go, okay, even though they have net 10, they're always paying in net 45 or 60. And if they're going to continue to do that, at least I can manage my cash flow. So I would say cash flow is definitely on close to the top of the list, especially as we're in this strange time where we're trying to streamline, manage cash flow, manage, you know, projections. It's important.
Yeah, I totally agree with that. You know, and my contribution to that cash flow management effort in my company, it's really just to deliver those accurate and timely reports to the leadership team. You know, and we meet weekly on it. We're able to focus in. My accounts payable is in on that meeting, and we really see whether, you know, we can pay everything he wants to pay, or I tell him, you know, then, you know, stop giving all our money away. You know, how much more do you want me to collect? You know.
Totally. Yeah, it's a very different environment from a growth environment. You know, when you're fueling growth, you think, okay, I can be a little bit, if you will, inefficient on my cash flow because I'm fueling so much growth. But when growth becomes more challenged, suddenly the discipline and the efficiency around cash flow becomes a huge priority. So it's one of those things I think we're all facing. Well, Carla and Bridget, oh, go ahead.
No, I was just going to make another point that I really think it's helping to realign our operations and along with our account managers. You know, they're really able to hone in on the accounts.
Absolutely. Well, Carla and Bridget, thank you very much for participating. Your insights were great, and your peers appreciate hearing from you versus listening to the marketing guy
Thank you for
Thank
having
you.
us. Appreciate it.
Thanks
Sure.
again.
So a couple of things just to finish up. I wanted to announce to everybody that we are making Lockstep early access available as of today. We launched our new website, lockstephq.com. So the strategies that we're talking about of digital onboarding, team inbox, and Magic Link account access, we're making that available for AR and AP, and it's in our early access program. If you're interested in that, please go to the website and take advantage of it.